All right, and we're back. So that was it for the live trading, up 2160 on the day, and I really want to keep this one just till 9:30 today. So let me look at you guys' things real quick. Blow them up. It's so hard for me to see these things. You guys can still see my chart, right?
I can see your chart. I have to put mine up.
Okay, so I'm looking at yours right now, Bocce, and you're still there, so I hope you can hear me. Okay, so what you did, it looks like you were on a 15-minute chart. So let me get to my 15-minute chart. All right, so it looks like you were on a 15-minute chart and you drew your no trade zone. It looks like you drew your no trade zone like in this area here. Possibly that looks a little better. I'll just draw a couple so it looks big. So on a 15-minute time frame, that's not where you're going to draw like your no trade zones and stuff, because this would have totally stopped you from trading all day. All right, the 15-minute time zone is primarily for just finding, your lower time frames or your lower support and resistance. And again, this what I have for day 5 of the boot camp, I'm praying it'll be done today, and I'm telling you, you guys, I don't think you'll have any more questions about setting up the pre-market game plan. But the 15-minute time frame is more you're just looking for areas of, where did we have trouble breaking, right? Where did we touch the most areas? What are the probabilities of, us coming back to one of these areas to the left? All right, so that's all you're really doing. You're kind of micro picking on your 15-minute just to give you better areas, right? Like even right here, this could be a potential area because we got 1, 2, almost 3. So we could potentially draw another line here. And you don't want to make it big, right? You don't want to fill up your chart with levels. So usually I'll make these like really thin. These are kind of thicker so you guys can see them. But the way you want to start your ranges is off of your 2-minute chart, right? Because this is where you're going to be trading. Now you can have your higher time frames like that 15-minute, right? Because now on the 15-minute, you can look at the 15-minute as an overall bigger range, right? And just like the other day when we were trading in the bottom portion of the overall larger range, right? We were anticipating that breakthrough to the downside and we didn't get it, right? But again, that was the area where we were talking about, they're not going to want to keep selling it down here. We're going to want to get some type of retracement, right, before they start selling it. And what happened that day? It just ran all the way to the top of the range again, right? Totally nobody could have predicted that. You could have traded it, though, right? When it didn't do what it should have done, you know that it's not going to do that. So now we could look at this as now we're trading in the top 25%, just like the other day we were down in the bottom of the bigger overall range, right? So on the 15-minute, you could find your bigger range, and now you know that you're trading in the top portion of that. But you really want to, for your actual entry and exit trading, you want to develop that on the 2-minute chart. All right, so you want to look for your ranges on your 2-minute chart. Like again, I came in and did this today. I think it was like 5 or 6 o'clock in the morning. So we already had all this range. It was staring me in the face, right? I had no choice but to mark it off because it's boom. It's just a big range. So I drew that top. I drew this. The bottom I think was from yesterday. I don't think I drew that bottom. And then I put in the no trade zone. And again, The no trade zone is just going to be 50% above, 50% below, right? Kind of in the middle. You want to capture that meat of the entire thing and stay out of that middle range, right? Because in this middle range, it is much easier for them to manipulate the markets, right? Because you got a lot of traders, inexperienced traders, just jumping in here, buying this stuff, right? How many traders you think were buying these candles on the way up just for it to reverse, right? And if you were patient and waited for it to get out of that no trade zone, right, and used your tools, right, you could have easily spotted that, right? You had divergence right here, right? You didn't have divergence here, but you did here. But here you're at the top of your range on the RSI, right? You're outside of your no trade zone. Excellent area to start trading, right? Start small, right? You could try and scalp that or take one trade on the simulation account, okay? I really want you guys to focus on trading, the breakout of the range, but I also want you to be able to be comfortable trading the entire range, because I'm only talking about one part of the range right now. There's several key parts to a range that you can easily trade that are, very profitable. And I've told you, you want to buy the lows, sell the highs. Just stay out of the middle. All right, you want to stay out of that middle area because you're going to get chopped up like there's no tomorrow. All right, trade in the middle of a range is like, you never know what they're going to do, right? There's so much manipulation in these areas, and it's not to say you're not going to see it on the outside of it also, but when you're up here, you're never ever looking to go long, right? And when you're down here, right? When you're down here, you're never looking to go short, right? The only thing in the back of your mind when you're in these areas is here, you only have one direction, and that's up. And when you're up in this range, you're never looking to go long. The only direction you're considering is down. Okay, unless we're in that part where I'm teaching you now, where you're trading in the bottom 50% for, some time, then you get down even lower, right? And then you get ready for that breakout. That's the only time you're looking to go short. Okay? Now, again, I didn't draw the bottom of this range. This was already set up. But in this area, you have from what I could just clearly see right here, you got the bottom of your candle right there. So even though this, was below that 50% line and even lower, right? We never did get down to the bottom of the actual range to even get a breakout, okay? And here we had divergence, divergence, divergence. As we made lower lows, we made higher highs. So this is one of my favorite setups. And Russo, I talked to you about this, about I love when they make the first low, then the second low, and we get the first low or the first bounce, the second higher bounce, because 9 times out of 10 you're always going to get that third glory pull down. So you're looking for 1, 2, 3. When you see that 1, 2, 3 develop with your 1, 2, 3, you can go big on this pullback because you're anticipating it. It has a very, very high win rate. Again, you're looking for that 1, 2, 3 on the down slant and your 1, 2, 3 on the up slant. So you're looking for that divergence. And usually I call it the 3-try divergence. And those are very powerful. They very, very rarely fail. But that's where I like to take big trades, is on that third area of divergence. Again, and these are all part of your the range that we're going to talk about. Like I said, the range doesn't only consist of what I'm teaching you now. There's plenty of excellent opportunities to trade inside ranges. All right, so just remember that. There's plenty of opportunities to trade inside of ranges. Okay, now over here, you don't have that divergence, right? You have, higher lows or whatever, but you don't have that divergence, right? but you did have opportunity to go long. Okay, if this is agreeing with this on the way up, that's a good sign also. Okay, but these are going to be your highest probability trades when you have that divergence in the RSI and price. Okay, price is coming down, RSI is going up. I'm always looking to grab that third bounce. Those are very, very high win rates. Okay, and they happen almost in every range. All right, even over here, this would have been a problem. Why? Because you're in the no trade zone. Okay, so if you see something like this, you got divergence, you got 1, 2, 3, right? Once you're experienced and you're comfortable and you feel like, hey, I want to give that a shot, give it a shot. But until then, don't touch it in the no trade zone, because I'm telling you, and I promise you, in this no trade zone, you're going to see more market manipulation than in any other area of your charts. Okay, stay out of that no trade zone. Okay, when you're below it, you are not looking to go short unless you have the criteria needed to trade a breakout. Okay, and that criteria consists of being under the 50% mark, right? You're looking to be trading, coming with lower highs, right? Like if this continued right here, if this price continued, right, and then pulled up and then came down, right, and then we got closer and closer, okay, that's go time. You're looking to trade that breakout. But anything other than that, right, anything other than that, if you can identify your areas of divergence, right, that's going to be your clue that, hey, we're not breaking out anywhere near here, right? So now you're looking for...
Can you tell me area of divergence? What is that?
What? Divergence?
You keep saying yes.
Divergence is when the price is making lower lows, but the RSI is making higher lows. Okay, so each time this came down, right, the RSI didn't agree with that, and it was making low or higher lows while the price was making lower lows. That tells you that there's more volume coming in, right, and buying at these lower prices, which inevitably is going to lead to the price turning around because more buyers are coming in at the lower prices. Okay, so that's the divergence that you're looking for. Okay, the price has made a lower low here, but your RSI made a higher low than it did here. Then here we made even a lower low, and the RSI made an even higher low. Okay, so that's what you're called divergence. Okay, so this is telling you that buyers are stepping up in this area, and then over here in the next area, they stepped up even more. So it's kind of like looking at, you could, if we had the volume on here, let's just add it real quick and see if it does show that or not. Okay, so here's the volume. Here's the areas that we're looking at. 1, 2, 3. Notice in this area the higher volume, and in this area the higher volume. Okay, here's your average volume. This would be your average volume. But in this area here, we had, the lower low, but the RSI made the higher high, and you had that volume spike. Okay, and then the same thing here, you had that volume spike. So this is your divergence. This is confirming that they're buying it, and they're buying it heavy, because the relative strength is decreasing, right, or increasing, which tells you that buyers are stepping in. Okay, that it's getting stronger, right? The price is actually falling, but it's getting stronger. Okay, this is letting you know the weakness is dying off. So it's letting you prepare for this move up. Okay, and notice, let me get rid of all this, and let me get rid of this. Let me get rid of that volume. I don't know where that was. So that's how you would trade divergence. And if you only traded, divergence, you would do very well on the day also. Okay? Again, in your no trade zone, right, you really don't want to rely too much on it. But here, price made a lower low and divergence made a higher high, and it was confirmed with that pound B that I added. All right, and I added this primarily just for that Pac-Man. Okay, same thing here. Price made equal lows, but you had the RSI making higher lows. Okay, this one here kind of was equal to this, but that's divergence. Okay, so if you use the divergence strategy and only traded, you could do very well with that as well. All right, I mean, you can go back here and look. Here's another one. All right, this price clearly, closed lower with a big red bar, but your RSI didn't. Okay, another good sign that you have a reversal on your hands. Okay, but not only that, you could have considered this a double bottom, right? You could have looked at your RSI. You got confirmation. You got confirmation on this pound B, whatever it is. I don't know. Remember, I went through all the indicators, and this one kind of replicated the projection. So, like I said, I didn't just throw it on there without looking. Here again, you got a flat bottom. Okay, price 1, 2, 3. Your RSI 1, 2, 3. You got divergence. You got a flat top with divergence with confirmed divergence. Okay, but again, this is a very, very easy strategy, and you can actually make a living just trading RSI divergence. And you can do that on any time frame. Let's look at a 5-minute and look. It's going to be a little bit different here, but okay, here's your 5-minute time frame. Here's your divergence. Okay, double bottom with a higher high. Okay, again, almost a double bottom with a higher high. Let's go back and look at some more. Here's that same area that we just looked at a few minutes ago. Okay, triple bottom, higher high, higher high. Okay, so playing just the divergence alone, is it a strategy in and of itself? Some people use it for that, sure. Can it be used for that? 100%, because it works. Okay, here again, you got divergence. All right, I mean, you could go back as far as you want and do it, and you're going to find it. But again, with that said, okay, you're looking to trade it in.
I think.
Go ahead.
Oh, bang bang.
Yeah.
Do the area of divergence have anything to do with the areas of liquidity?
No, they don't. It's two different things. I was just going to explain it. Like when you see divergence, right? Like this divergence right here, okay? And in this area where you're in your no trade zone, no, but look what happens when you have this, divergence, right? You can now look at this as a mini range, okay? And your area of liquidity, let me zoom in on this. I know it's complicated, guys, but this is why we're doing this, right? This is so you can understand this. And again, it's all going to be broken down step by step. I'm just kind of jumping all over here with the boot camp, right? An area of liquidity is nothing more than stop losses, okay? An area of liquidity is nothing more than stop losses. So notice here you had, let's open this up. Right here in this area, okay? And I'm answering your question just on a bigger scale. So here you had one bar, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bars, right? And all of these bars are above this arrow. So that means all their stop losses on every one of these bars are going to be right there. Okay, so this is what causes these big moves, is stop losses. This isn't traders actually all going short. That's stop losses being hit. Okay, so this really is, you have traders who are short. You have dumb money that shorted it here just to get burnt right out, right back out of it. But 90% of these liquidity bars are caused by stop loss is getting hit automatically from the bar going below it, which is what causes that fuel. Okay? So the same thing here, right? If you were looking at your RSI here, the divergence with a double bottom, right? Your confirmation of this could have been this wick, which is a reversal candle, and you could have got in right here on this to the upside, because not only do you have divergence, but you're at the bottom of your range, right? You have divergence as confirmation, right? You just had this liquidity grab of all those shorts. Your next bar was an excellent entry bar to get in, and it sets up your stop loss with a very tight stop loss. You couldn't ask for a better setup than this. All right, and I haven't talked about it thus far because we've only been concentrating on the breakout. But, I think we could start talking about this. So, yes, that's what I'm looking to play in areas of liquidity, okay? So, this one, where this happened, this would have been a very risky play because you're already at the bottom of your range, right? Okay, so like I said a few minutes ago, you would not be looking to short in the bottom of your ranges. You're only looking to ride the back up. So your high probability trade would have been to the upside, and that would have been the quickest money you would have made, right? In 4 minutes or 6 minutes with those 3 bars, you would have made a decent amount of money, as opposed to if you were just trading every single bar, right? If you're patient and you wait for the setup to develop and come to you, and you can have pieces of information, you're going to end up making much more money taking the least amount of trades possible, and that's the name of this game. Okay? So when you're trading these ranges, the bottoms and the tops, you're looking even right here. Okay? We had the same exact thing happen, but on the opposite direction. Okay, here we wouldn't be looking to go long outside of our no trade zone. We're only looking for the opportunity to come back into it. Okay, and here was your divergence. Okay, equal highs, lower high on the divergence. Okay, so that's what you're looking for now. And I'm burping at the same time, excuse me. So here, if you treated this as a mini range, a range within a range, we haven't talked about it yet, but what do you have? You have our full range setup, right? Beautiful range, a big range. Now you have a range within a range. You're outside of your no trade zone, and you have your Goldilocks zone, right? You're in the top 50% of your mini range. If you had your no trade zone in your mini range, right? You're outside of that, right? You're not in the no trade zone yet. You could have traded this thing right back up. Okay, so don't go doing this yet until you're comfortable with the original breakout strategy.
So if you look at my chart when you're ready, that I did, my pre-market.
Yes.
That Goldilocks area, my no trade zone. So
let me go up.
I don't have it down yet.
Well, I saw that, on both. I can't. It's hard for me to see, and I'm too stubborn to go get glasses, but I really need to. But
you sound like me.
Yeah, I noticed it, that how you had it, but it looks like this is exactly where you drew that, right?
Yep.
Yeah. So I mean, that was excellent as far as identifying a trade zone, right? That was excellent job on that. You identified it, but you just missed the overall trade zone, right?
Yeah.
So I mean,
did.
But excellent job identifying that, because that's a perfect trade, right? And when you came in, if you were in this area, but yeah, you should have definitely had this. You could have marked it off like this, right? You could have started with these highs and just kind of marked it off like that. So that could have been your range at the time. But I definitely would have started up here, though. Yeah, don't even listen to what I just said. Start up here. The top.
I screwed up because in my mind I marked that as my trade. It's a no trade zone. So that was completely wrong.
Yup. Because wait, remember?
Right.
Well, no. I mean, I'm not. I shouldn't have laughed. I'm sorry.
No, I'm fine. I mean, it's my first time.
No, but listen, remember when I said as price forms, right? Like if we were coming back here as price is forming, right? We're first of all we're still inside of this range, so we already have that. But here, right, back here, we're not in any kind of range, right? So there's nothing to the left of this high. All right, so you have no, there is something to the left, but as far as our immediate left yesterday, there's nothing there. So how do you start a range? You would mark off that high, right? You would mark off that high to start a range, and then right here is where you would have originally drawn your low. This would have been your second low. Then this would have been your third low, right? Even if you wanted to, you could have actually done this number, right? You could have used this with this, so you actually could have, like if you started it here, you could have brought this back down to here and then went this way. Okay, that would have been a good area. But now I know why I didn't draw the bottom of my range, because of this red line. And I don't know if that was from this yesterday or not. But like I said, the red was already there, so that's what I went with, because it had already respected it here, right? So, no, I mean, you did excellent. You did identify a range. This is a range within a range, and had you traded it like I taught you, it would have been an excellent play. Yeah, what's that?
For scalping, the 2 minute, for scalping, you use the 2 minute time frame, and to draw the ranges, you look back just a day or two.
Well, to identify your range, you're gonna your ranges are gonna come from your 2 minute time frame. Okay, like you'll be able to identify ranges. Let's go to the 15 minute, because we've been in a range for quite some time, right? Just a bigger range now. But if you look at this,
To start to draw the range, like how many days back?
Yeah, for the pre-market setup.
well, the pre-market setup, because like right now we're trading up here, okay? So from here, you don't have any information to the left of you until you go all the way back here. So to start your pre-market setup, you always want to start on that daily time frame, okay? Because up here, you're going to be able to identify. You're looking for your triple tops, double tops, right? That's what you're looking for to identify your pre-market game plan. Okay, so note our candles. Go ahead.
I'm not even.
Our candles, we're trading right in here now. So the biggest areas we want to identify is the immediate left. Okay, the immediate left from where we're trading at is the areas that we want to identify. Okay, not every single area, because look in relation to where price is. Let me move all this down. And I'm telling you, you're gonna love the boot camp, because this is the actual picture I used for the daily time frame. But okay, price, first thing you're gonna do is come and say, hey, where are we trading? Right? We're trading right in here. Next thing you want to do is look left. Do we have anything to the immediate left of us in this area that we're trading? In this area, do we have anything to the left? No. So we have to go up. Okay? So we want to go up, and then we want to bring this right to the close of the candle. Okay? Because we're trading in this area, we have nothing to the left of us but space. Okay? Absolutely nothing to the left of us but space. Now, do you see that, Bocce?
Yeah.
Okay, so here's our price. There's nothing to the left of us except space. We do have this wick, which we have marked off on the lower time frame, which is from yesterday. That's yesterday's close. We know that, but if we're to break this today, where are we going to go? Don't mind this line. I don't know why it's sitting there, right there where it is. Possibly because that could be another area. But, you want to look immediately left to get your, where could we possibly run if we break out of this area, right? And on the same note, you want to look left on the bottom, right? Where could we possibly reverse to if we break down on this area, right? So you want to, on this time frame, you're only looking for your major areas. 1, 2, 3. That's it. All right, you're looking for anything higher than where you're at to the left, and anything lower than where you're at to the left. So here you would have 3 areas, 1, 2, 3, and you're done with that time frame. All right, now you from here drop down to your 2-hour time frame.
What about the 4 hour?
You can. I don't think I have it up here, so I'm just gonna jump here. But yes, you can go to your the 4 hour and 2 hour. They're pretty much going to be the same. All right, because you're going to be able to see it. Like each bar represents 2 hours, so they're pretty much going to be the same. All right, so this is the area you just marked off. Right, you marked off that area, and this area. Those were your 3 areas on the daily that you marked off. So what you're doing here now is you're doing the same exact analysis. You're saying, okay, from the left of where we are currently trading at, right, if we break, where's the first area that we could run into resistance? And that's going to be that wick, okay? So you could want to, I already have a line there. Again, it's probably for that. But if you look to the left now, all right, where did price struggle the most? Okay, where is a nice trend line going to work, right? So we can clearly see that price right on this candle, which is why that candle stopped where it did, because had you looked left prior to that, you would have seen price coming up here, right, getting rejected. Here it used it as support. Here it got rejected. So you know that's going to be a key area you want to mark off. And now the same thing to your downside. If anybody knows what's that?
Do you clear this off every day, or do you leave the resistance and support there and continue?
I just move them around every day. So you're basically your major resistance obviously isn't going to change until you break through it. You know, once you break through it, I always like having the next area marked off just in case we see that major run for a day, right? Then this way I'm prepared. I'm not, chasing it and going back looking for it, stuff like that. But from this time frame, you want to mark off your next few levels, right? We should have a level right here in this area. We should have another level right in this area. And I don't have them. I think because, this is on the 2 hour and I didn't put them on there. So I have them on today's, but from there go to the 1 hour, and now everything should start looking nice. Everything should start coming together. And from this, you're looking, again, all you're doing is trying to identify areas of possible reversal. So right here, right here is an area where price could come down and bounce off of. Okay? All you're doing is looking for potential areas where price has made reversals in the past. Where did price react the most? Where did we see the most, touches? And right here is where we saw that. Can you guys clearly see what I'm looking at?
Yes.
Okay, right? Because price came up here and it rejected. It came up again, it rejected. Here it broke through. Over here, when it came back up again, it struggled, right? We're on a 1 hour time frame. So for 1, 2, 3, 4, 6 hours, it couldn't break through here. Right here, 1, 2, 3, 4, 5, 6 hours, it couldn't break through here. You have now identified a major level of resistance below us now. Okay? So you want to add this to your chart, because when price comes back here, you're going to have a major area where we're probably going to bounce around like you've seen in the past. Okay? So the odds of, let's say you traded this breakout, right? Where's your take profit going to be? Okay, if you have an options contract, all right, because that's a 200-point move from there to there, right? You would definitely want to try and capture at least 100 points, right? You're going to have resistance right here, okay? You're going to have resistance right here, but from the overall breakout, that's about 100 points. So, maybe capture 75 points on that move. But this is how you're identifying where for certain price is going to react. All right, price is going to react 100% for sure in this area. It's going to react 100% for sure in this area, right? Because we had such major trouble in the past in that area. So that's how you're developing your pre-market game plan. Then when you come down to your 2-minute, right, all that information is going to be there. Now it's all looking funky on my chart.
Yeah, but it's understandable.
Yeah, it really drives me nuts. But if you shrink it all down, everything you drew should come out. But I moved some while we were doing that. So that's okay. Like, yeah, Friday. Is this Friday's close?
So our zone is 1150 to 11500. 11400 to 11500.
Right, and again, we're not looking for an exact number. Okay, all we're looking,
I know.
yeah, right, because you never want to have like, all right, we're at 11,500, sell it, right, if it's going up. No, you're looking for that, the overall area, okay, especially in a range, right? I'm teaching you guys how to trade the break out of the range. Okay, so Russo, excellent job identifying that range. All right, but just focus, when you zoom out, just focus on, the overall, the bigger picture. Maybe, just zoom in the screen a little bit. But where you started it, at least you identified that range. I'd give you 100% correct on that, because that's actually, like we just discussed, trading that range in the range with that divergence. You're outside of the overall range. All right, that's a range with a range. And again, you'll have multiple ranges within a ranges, right? It's just where do you want to trade them, right? Don't trade in that no trade zone. But yeah, getting multiple ranges within a range, you're going to see it time and time again. All right, now notice how since we started with the range strategy, do you see how many opportunities there are to trade a range? Which is why I'm starting with this, because this is going to get you on the road to profitable trading a lot quicker than any other strategy out there. Right? Like, it seems like ranges is all we're seeing right now, right?
Yes.
So that's why that's why I chose to start with this range, because like I said, every time the market makes a big move in one direction, it will like to range or consolidate, right? And it does it over and over and over again. So mastering the range is going to be the biggest tool I can start you guys off with to the road of profitability, which is why I'm starting to teach with it. All right. There's plenty of other.
I definitely don't. I don't feel confident yet. I think maybe the next video will help me.
Yeah, and don't worry. Like I said, guys, there's no rush to trade live. Okay, if you're ever going to have a shot at this, all right. If you're ever going to have a shot at trading, you're going to have it with me, all right? I solely, with my whole heart, want you guys to succeed. I don't care if we don't go live trading for another 3 months. I could care less, because when you guys come live trading with me, I don't want any more questions when we're live trading. You know what I'm saying? So the time for questions is now, because like you, I want to focus on my trading as well, right? Because believe it or not, when you're teaching people to trade and you're trading, ask Russo. I've told her 100 times, or not 100 times, but she knows. I'm like, oh, if you see this, please mention it to me, right? Because I'm under pressure, because I want to do good for you, right? I want to make you guys money, so I'm like under pressure. But, now that we've been doing this so long, I'm kind of getting used to it. But, yeah, so don't feel the pressure to, go, you have to get your account funded tomorrow because we're trading live on Monday. I don't want you guys touching that account until you have no more questions. All right, so I want to focus on this strategy, because if you have this strategy down, you're going to have no more questions. And while you're learning the other ends of it, you're going to be able to be out in these markets being profitable. Okay, so this is a major tool that I'm teaching you right now, a major strategy. There is multiple ways to trade this strategy. Okay, not just the breakout that I'm starting with. All right. But there is plenty of ways to make money with this, what we're learning right now. All right, so don't worry about it. Don't worry about going live. Okay, if you're gonna make it, you're gonna make it. If you're not, you're not. But I want to take the time with you guys to teach it to you, and you understand it. So don't worry or don't feel pressured to, I have to get this right now. These 2 videos that are coming out next are setting up your charts and I'm going to have the entire range strategy in day 6 or 7. So in the next 3 weeks, those 2 videos, this one should be done today or tomorrow, but the range overall within the next 2 weeks, because it's going to be jam-packed with information. And if you come in with me live in the morning, you'll learn little by little. But that strategy, then you'll have it. You'll have that day of the class, and you'll be able to watch it over and over and over and over again, right? And then you can implement it on your own. So, only... Go ahead.
That area right there that you highlighted, see the light area, that's the no trade zone, and is the 50% within that highlighted area? Is that what you're talking about?
Yes, the no trade zone. I don't know why this thing got so big up here, but it's really driving me up the wall. Hang on. Yeah, I don't even know where that came from. That could be our up above zone. Yes, it was. So now I don't know where we are up above us. So anyway, yes, when you mark off your high and you mark off your low, you can come over here, you can draw a line, right? Well, how could I say this? If you wanted to draw a line here, okay, here, if you drew a line all the way down, right, if that'll help you, just try and mark the halfway point of that line. Okay, so if you mark the halfway point of that line, now to draw your range, okay, you want 50% on either side of that line for your no trade zone. So you're looking almost for the middle chunk of that line, because you're going to want your top, you want to have room at the top of your range, 50% on each side, for you to be able to trade back into the range. So like I said, this looks like, if you look at this as a big topping tail candle, okay, that's what you're looking for in your range. Okay,
You just explained that so good.
what's that?
You just explained that so good.
That's right.
Yeah, that was good.
That was
Cool,
good.
I'm glad, because that I'll use that in the video then, but that's exactly how you want to set up your range. So you're going to get the meat of your range, which is in the shaded area, right? That's the big chunk of that range that you want to steer clear of at all costs, okay? Your money zone is going to happen on the 50% on each side, okay? And on each side, you never want to trade to the upside on top of the range. You're only looking to trade back into it. And on the bottom of the range, you're never looking to trade down. You're only looking to trade back into it. Okay, now look at this. This is a beautiful example of what we have happening right now. I'm just going to go ahead and short that right where we are. And I'm going to keep shorting it up here, because this is a high probability setup.
Order filled.
All right?
Order filled.
Actually, I could have just boned myself, because I don't know if earnings just came out, but... So don't ever just do what I did. But anyway, look at these big bars coming up out of this range. All right? This has no other choice but to fail. All right? And I don't want to say that because I don't know if earnings just came out, if they started releasing those numbers, because they very well could have. But I just looked to my right and immediately saw that, not thinking. So let's see if we can even put some more sell orders in. All right, so we just profited on that one. All right, but these are things that I want you guys to be able to just jump right in and identify it, right?
Like, there you go. It's going.
Yeah, it's coming. Like I said, big bars like this are never going to work. Okay, so when you see big bars starting from all the way down here, there we go. All right, this was the MNQ, not the NQ. So let's see what our parameters were on that. So we made $21. So I only had $10.50, right? But okay, this is where I want you guys to be, right? I'm in the middle of teaching, and I just happen to see these big bars, okay? When I see that, I see dollar signs, right? I get all excited. I'm like, woohoo! But I forgot about earnings, right? So that was bad on my part. I'm teaching. I don't know if the earnings are being released now. I would imagine they are.
We're
getting close to the bell, but regardless, right? When you see these big bars, right? We started this at the bottom of this range, okay? we started this move at the bottom of the range. So the chances, right, the probability of this continuing higher are slim to none, right? Because it's already ran a marathon, right? It's already ran a marathon. And if there's no news, which the earnings are, right? So if there's no news to back up that move, it has no other choice but to fail.
Order filled.
Right? So we probably are just seeing the earnings numbers starting to be released. Right? And right now, you just got, your retail
Order
traders trading this in. So that they'll let this move the markets like that for that type of a thing. But coming up to the top of this range, would you guys be looking to buy this breakout?
No.
No, absolutely not. Absolutely not. All right? You're looking to short that bad boy. And most people, most of the trading world would say, are you crazy? Why would you short that? Well, because we know what we're doing. That's why we're shorting it. Right? We know. I mean, again, if earnings are out and they were super good, the market's going to react to that negatively eventually. Just watch. And I don't know. Let me look at the SPY here. Let me see if Benzinga. I don't have anything on. I'm kind of in the blind. Home price index up. Twitter. Crypto. No, I'm not seeing anything on earnings. So.
Oh, it's busting through. There was another red line you had above it, so
I'll actually
order filled.
I'll actually short that all the way
Order
up here.
filled.
The higher we go, the more I'm interested in shorting this.
Order filled. Order
right?
filled. Order
I'll take
filled.
a bunch
Order
of
filled.
orders up here
Order
because
filled.
that's how you're going to make your quickest money, right? On these big, massive bars. But again, I don't see any earnings, right? We could have earnings right now, but this price is coming back down. It can't. Price cannot sustain itself with such big moves like that, right? I mean, we are close to the bell. We have a few deciding factors that are against us, but the probability, right? If you're playing,
Order filled.
If you're playing
Order
odds, right? The odds are highly in your favor
Order
to
filled.
short the heck out of that move, right? So now we just made, almost another $100. We still got 2 contracts on there, right? But the odds are so stacked in your favor. If you're at a casino, these are the odds every gambler is looking for, right? I mean, the odds of this continuing are slim to none. But again, I don't know if they are releasing earnings. I don't know what time the earnings are coming out. Remember, I'm really not too focused on that kind of stuff because at the end of the day, it's really not going to matter as far as what we're playing, right? About how we trade. The news really isn't going to matter. The earnings, yes, you want to be on the right side of the trade. You want to be in the right position. But when we're ranging here, right, when we're ranging, okay, and we just made that massive sprint to the upside, right, a massive move, the odds are not in the house's favor for that move to continue, right? What these moves do is lure all the dumb money, and I'm able to take the money right out of their pocket and put it in mine, right? So that $90 there, we would have made $900 in the NQ, right? Okay, because retail traders, this is why you cannot think like them, all right? Retail traders, they see these big bars and they're just like, woo, let's go Redskins, we're breaking out, right? And they're all piling in all their money on this, right? Not me.
Money.
Right. And I'm just, when I see that, my bank account, my wallet just do the happy dance. I'm like, yeah, right? I love retail traders. I love them, right? Without them, we couldn't make money like we do, right? But, and again, this just unfolded in real time. This is why it's important to go back and watch my videos. Something always happens in one of my videos that you'll get great knowledge out of. Right, so we made our money. Right now, let's wait and see what it wants to do. Right, just don't keep loading up on put options. Right, the higher probability trade is still in our favor, but to short these individual candles, man, load up. You know what I'm saying? Make that money while it's hot. Right, get your food, get your money. Right, pay your bills. Right, these things are gonna pay your bills so fast it won't even be funny. But you'll be able to identify that stuff nonstop as you grow, right? Again, the odds are not in the house's favor up here, right? Look at the marathon this thing just ran. Now, like I've always said, here's one leg, here's two legs. Could we get that third leg? 100%, absolutely, right? But we capitalized on these legs, not this one, because this is when I actually saw it. But we capitalized on that specific area, right? We took our money, we got in, we got out. That's what you want to do. Don't overstay your welcome. Don't get greedy. Grab your money, right? What's that thing? Ooh, take your money and run. Boom, boom, boom. That old song. Come on, take your money and run. Right? Now, that was just a specific strategy that I played, right? I wasn't looking to ride that for an option for a whole day, right? That's just a really good money strategy. So, again, there's got to be something going on. Either it's the earnings started kicking out and I'm not seeing it. I don't know what time they come out. I should have been better prepared. But typically between 9:15, that's when they'll start releasing them. But again, don't buy into the hype. All right? Don't buy into the hype, because if super good earnings are coming out, remember how the Fed's going to interpret that, right? They're going to interpret that as, okay, people are still spending money. You know, in our opinion, yeah, it's not that bad.
Let's raise it another 75 points.
Well, you know, all jokes aside, that's how they operate, you know? Like I said, they live in fantasy land. Everything is delusional. And the numbers, you got to remember, they take out all of the key numbers like your food and your gas and all that stuff. Why did they do that? Because that would inflate the numbers so bad, you know, that would scare the entire population. I forget the name of the website, but there's a website that has the actual numbers, and the actual numbers are almost at 20%, not this 8.9% that they're claiming. Years ago, they took those numbers out because they didn't want to scare the public so bad. Again, that's how our government works, right? It's all about manipulation. How much can we bend the truth? You know, how much can we, you know, sway the story or skew the numbers, right? You know, those are just the things you should know in general. But as far as the market's concerned, yeah, you know, you're looking for that. So now, right now, you know, what are we at? 10 minutes to the bell. Where are we at? 100? Are we at? No, we're at 3. Where is yesterday's close? Right here. So we're 100% net long. Okay, so now that gets me even more excited. All right, now these traders are buying this. How do
you say we're net long?
Order filled.
Huh?
How do you come up with we're 100% net positive?
Because this is where we closed yesterday.
Order filled.
All right, we just scalped some more money. Okay, if you look down here, you see my cursor with the time?
Yes.
Okay, so the market closes at 5 p.m. So right here is where the market closed. Right here where my hand is.
Got it.
Okay, so if the market closed right here, let's bring it all the way over. Right. Let me get back here.
I got it.
You see what I'm saying? So we close. That means right now we are 100% net long. The higher probability trade is to come right back because the market doesn't like to be imbalanced. All right. So when the market opens, it doesn't like the unbalancing. All right. It likes to be, you know, in a balanced area. Now, does that mean we're going to come back here? Absolutely not. But the higher odds, the higher probability trade would be looking to come back to the downside. All right. And regardless of that, with a move like that, right, the odds are really not in your favor to continue higher without some type of a pullback. Okay? Again, it's all about probabilities and what you know, right? I know from doing this for so long that this is never going to work. I don't care who tells you otherwise. You know, you can tell them I sent you and said it's never going to work. All right, so don't ever fall for that breakout, right? If this was to have any chance, you would have wanted it to start from the 50% line, okay, with the pullbacks, right, getting lower and lower and shooting off from there. But again, what's that?
Working its way up,
right?
Little by little.
Granted, this started from the 50% mark, but big bars like that are never gonna have enough fuel to actually rip out without some type of consolidation. Okay, you can consider that max liftoff, right? They used all their what do you call that, nitrous oxide getting from here to here and then from here to here. So now they need to refuel, right? They need to refuel, but now the odds are really not in their favor because we got the opening bell coming, right? We got 7 more minutes. And if we do, okay, let's just say we do end up ripping all the way up here or up here, right? At the opening bell. Okay? I'm going to go ahead and short that.
Yeah.
Darn it, I keep missing the tops. And I don't think I got filled. But anyway, now what you're going to have is a gap to fill. That would be called a gap to fill. Okay, so if today we just shot up and we never came back down, right? And we traded up here all day, and then tomorrow we went a little higher, we now have this gap to fill, which means where the price closed on Monday to where it opened today, there's now this big empty gap that needs to be filled. So typically gaps to fill in the market, like I said, the market does not like to be out of balance. So typically I tell you, it will fill that gap within a day or two. Okay? 95% within the first week, 100% within 2 weeks. Okay, the market does not like to leave gaps. So if we do gap up and we do not pull back, you're looking for that pullback possibly within the next 2 days, almost 100% by the next week. Okay? So, it's never going to continue to go higher without closing that gap. So if you were to just shoot up today without coming back to fill that gap, it doesn't matter how much you do, and unless it's completely full, it's considered a gap to fill. All right? Does that make sense?
Yes.
All right, cool. Because you want to know that, right? Because if you're listening to YouTubers, right, and we just gap up like this for today and tomorrow, and they're all telling you, hey, put everything you have back in the market, we're rallying. I've seen it. I've seen them do it all through this whole drop from December. And they look like chickens with their heads cut off because now they got to go back with their head between their legs to their people and say, I'm sorry, it was just a bounce in a downtrend. You know what I'm saying? So if you see that we don't fill that gap today or tomorrow and you start hearing people, all the bulls, oh, we're never going back down there. You guys now know, oh, yes, we are, right? The market 100% is going back down there because we have a gap to fill, right? The market does not leave gaps. Remember, the market has an objective. It wants to go from point A to point B and to point C and to point D, right? So the market is never, ever going to leave an area with a gap, right? It's going to come back to that gap and fill it. All right, so always know that. That's why, having that you guys understanding that terminology and knowing that is super important. Okay, same thing to the downside, right? If you're down and everybody's telling you we're selling all from here on out, we're never going back, in the back of your mind, sure we are, because we have a gap to fill and the market doesn't leave gaps. All right? So just know that in the back of your mind. All right.
Okay.
So do you guys got any questions? I'm going to stay on for like 9:35. Let's just see what the opening bell does. But right now, what should we have already done by now?
Put today's opening.
Right, there we go. And we have a huge opening just like that gap to fill. Is that 8:30? Yeah, it's about 8:30. All right, so now let me ask you this, okay? This is a perfect day, and I'm glad you guys are here with me. But now, if we do get a breakout here, would you guys buy that? Would you trust it?
No.
Why not?
I'm going to wait for it to come back down.
Well, we don't know if it's going to come back down.
Yeah, but I know it's got a gap to fill.
Right, but it might not fill it today. Right? Like I said, it could take off and go up today, tomorrow, possibly even Friday. Right? But typically within 1 week, if it does leave a gap area, it's going to fill it within 2 to 3 days on average. Okay? Sometimes it could go a week without filling it. But if we do not come back to this area, that it's going to come back eventually. Okay? Because there's no market. The market will never leave a gap above it or below it. It's always going to come back. It has to come back. It's the way the market works, right? So anyhow, I would not buy a breakout of this area if we got it at the bell, because we have this massive move up, right? And again, we've had that strong move, what was it, Friday? Okay, we had that strong move, which is why we're hovering in the top half of this range. Like yesterday's pre-market, what did I say we were looking for? We were looking for that pullback, right? We were looking for that pullback because of a big strong move. Buyers wouldn't be wanting to buy up here. They'd want to pull back, right? We were looking for these pullbacks for them to add, okay? So now are they all confident? They're all adding. We're coming into earnings, right? And now we're breaking. Again, if everything's looking good, they're still not going to want to buy at the top. It doesn't matter where you are, you know, what you're looking for, okay? Smart money is just not going to want to buy the tops of anything, okay? Now, could they have been adding in all morning? Sure, they could have. We don't know, right? We have no idea. All we know is what's in front of us. But the odds being 100% net long, right, being at the top of this range, the odds are not in our favor. Now, let me ask you guys, what else does anybody see?
Above the 20 in the VWAP, which is a good sign that it's going to go up.
Well, there's a lot of space between that. So if we pop up here, I'm going to put in orders to sell. All right? I'm going to put in orders to sell if we come up in this area.
Order filled.
Right? And then I'm going to ride that momentum back down.
That's really moving.
Let's see if we get fill. Right. But again, the odds are in our favor to come back down, right?
Order filled.
The odds are in our favor.
Order filled.
Does that mean it's going to? Absolutely not. But I'm using the odds, right? The odds are in our favor to pull back down into this area to come back down, right? Let all these people be buying this thing, anticipating, you know, that really high move or breakout higher, but the odds are not in their favor for that to happen. Okay, the odds are in our favor to come back down into this price range, right? Now I got 3 here. Okay, we do have 3 contracts that we got filled for. All right, but you see what I'm saying? The odds are not in the favor for strength. And again, I don't know what the numbers were, but if they were good, that's really not good for the market. So either way, you know, the odds are not in their favor for this thing to keep going higher. I'm actually even going to remove these. I'm going to add more right
Order
here.
Order filled.
Right? I like
Order
adding
filled.
on bars like this, okay? That's just my trading. Pull this one back and pull this one back even further. So now we got 5 contracts on here. And I'm going to leave these just above these candles right here. And I'm going to leave this one right above our high. So I have 1 order to fill, 2, 3, 4, and 5. Okay? Now let's see. Do we get tweezer tops here? But again, the odds are just not in the favor for this to continue higher like that. Okay? Could it? Absolutely it could. But I'm playing the odds right now. All right? I'm playing that strong bullish momentum. All right? But remember, right now, if you look at the overall big picture, our 20 has a lot of space, and look at the price from the 20. All right? There is a lot of space, right? So that's even more odds in our favor. Okay? Now, here's another
Order
piece
filled.
of information. Look at this big bullish move. Did the RSI even come up to that point back here? No, it came down. But again, with all this space between the price and the 20 and the 20 and the 200, okay, we're looking at almost 100 points in this move. All right? So the odds are not in their favor to continue this strength to the upside. Although it was very bullish, right? We've consolidated. We've been hanging above the top, right? But I don't know what the earnings are. I'm still going to add again here.
Order
Short
filled.
this. And I'm going to move this below our take profit. So all of these, right, when they get filled, we should be up a decent amount of money. And if we pop back up again, I'm going to take another one. All right, this is just the confidence level that I personally have
Order filled.
in this, right? The strong bullish move. But again, the odds are in our favor. We have so much space, right? So much space below us. We gapped outside of that. We now have a gap to fill below us. But like I said, we could come and see that, right? I really like this candle that just formed, that 2-minute candle. On a 5-minute or 15-minute time frame, guys, this is one of my favorite patterns to see. If we had this one close like that, and then this one would close red with the close of it right here, that 3, 1, 2, 3. Those are my favorite patterns to on a 15-minute chart for a reversal. I love seeing those patterns. But anyhow, it's 9:35. You guys, if you want, I'll screenshot this because I'm not touching those orders. I'm going to just let them sit there.
Okay.
And we'll let them ride. Let's see if they get filled on this bar. But again, this pattern, again, on a 15-minute time frame. If you see a pattern like this develop on a 15, I love that as a reversal pattern. You know, you can pretty much look to short, but we'll leave these orders here. I'm not going to touch them. I'm not going to move them. Again, the
Order
R's
filled.
are in our favor.
Order
Now,
filled.
look how much we're up now. We were just at 0 right up here, right? But that's just with the one little contracts, right? Well, we have 5 contracts. But again, it's about probabilities, right? So now to manage this, right, this would be the higher probability fill zone for such a strong bullish candle. Okay, but I'm going to leave them where they are. Again, we have that gap below us, and the market, if the earnings were good, isn't going to react to that positively. All right, good news on earnings like this with the economy where it is bad news, and bad news is good news. So maybe it was bad,
Order filled.
and that's why the market's going up, right? I don't know. So I don't know. All right, here it says, jittery day for U.S. market. S&P Dow futures retreat ahead of big earnings day. Okay, well, that was old news. Oh,
Order filled.
I didn't have my thing. So look, we're getting filled here all the way down.
Yes, you sure are.
Russian jitter. And this is the MNQ. This is the one we're going to be trading. So you could see with just those 5 contracts, well, we were up $100 and some dollars prior to that, but there's plenty of money to make in here with the MNQ, right? And once you guys are all comfortable, right, we'll switch. Here's the deal. We'll switch to the NQ once we bring that 500 to 5,000. And then we're only allowed to trade 1 contract on the NQ. All right, that's the deal. Okay, because there's no point. You see, now this is what I was just saying, right? I was expecting that pullback here if we were going to continue higher. But again, talking, I wasn't paying attention. But we got 2 contracts. But now you see what I mean about the odds and the probabilities, right? And how when you're confident, don't let the market try and shake you or sway you. Okay, when you do this and you get it and you see it time and time and time again, don't let bars like this, right, sway you or get you to move your positions, right? Don't go moving your position right next to it and be like, oh, I hope I get filled, right? I don't want you to have a what do you call it? I'm gonna actually move this up, and this is I'm speaking to why I'm doing this, right? We pulled back, so we pulled back right to this area, right? So this could be that 1-2 reversal, and we're not going to see that gap to fill till later in the day or tomorrow or whatever. So I still do have this one here, but I don't want you guys to be questioning yourselves when you get in a trade, questioning yourselves and being scared because something's happening. You know, you're not confident in yourself, and that should show you you're not confident to go trading a live account. Okay? So don't question your decisions. If you don't know whether to get in on that, don't get in on it, right? I took this because of what we saw happen in this area, right? In this area. That's why I'm taking this trade. Okay, we closed 100% net long. I don't know what the earnings are, right? But now that we pulled back, we had the retracement, just like we should have, right? Which is why we were entering up here, okay? Now, what would have been our excuse to close that? This is when we would have closed it. Had this candle, if this candle that formed went up, right, and closed solid at the top, well then yes, cancel your entire position. Market's not doing what it should, right? If you saw that. But again, the odds of that happening, you'd have a better chance of winning the lottery after you saw such big moves like you did over here. Okay, so again, a game of probability and odds. You had your first leg, your second leg, your third leg played out, but sideways. So 1, 2, 3. Because of all that, right, they at the open, everybody just went 100% net long, and now they're all getting spanked, right? They're all getting spanked, especially the people that paid our bills, right? They're getting spanked. But look, we're already out. 80% of our positions off the table, right? We had 5 contracts. We got 2 left. We adjusted this one because we could see that 1, 2. All right, you guys see what I'm doing here?
Order filled.
There we go. That one's out. Now we got 1 left, right? So now we could cancel that one, close it for the profit, or we could let it run. What do you guys see forming right here? We're getting that micro triangle pattern. All right, let's see if it's going to close out the bottom or continue higher. All right, these are all things you're going to learn, and there we go. All right, we're coming right down to it. Now, if this candle closes, I like to adjust it just up like I did that one, right up into the range of the previous candle. And I'm talking about things you don't know, so don't worry. I just little by little, you'll learn as we go, right? So now I'll take this one and I'll bring it just within the range of that candle, because 9 times out of 10, if the strength will continue to the upside, they're going to want to come back and take people stops out who are long, right? This is a game of, you know, we don't want you to make money. We don't want you to follow us, right? So what do? They'll rip it right back down, take all those stops, and then you'll get that massive rip back to the upside. Okay, so learn and understand how the game is played, and you'll be in this forever. As long as you don't do dumb things and chase the market, right? Don't be buying this bar. You know, how many people got stuck right here? Okay, don't play that game. Pay attention to the only tools we utilize here, all right? Because they're the only tools you're going to need, all right? But focus more on what you see happening, right? Pay attention to what actually happens first, because even our tools are lagging. This is the only real indicator you have, is price action. So if you see something developing, man, get ready to make that money, right? Get ready, but also consider the times, okay? The times and the news, all right? All right, guys, I don't want to be on here all day again. God bless you, and I'll be on that boot camp all day, and I'll see you tomorrow morning. Have a great one.
Thank you, Bang Bang.
You're welcome.